Have you ever found yourself staring at your trading screen lost in a sea of flashing lights and cascading numbers? It's a familiar scene for so many of us. You're surrounded by data, a command center of your own making. On one screen, the relentless pulse of the crypto market, Bitcoin making a sudden heart-stopping surge. On another, Ethereum painting a picture that looks similar yet subtly confusingly different. Then your eyes dart over to the S&P 500, the behemoth that dictates the mood of the entire stock market. And of course, you've got gold, the traditional safe haven, moving in its own enigmatic way all at once. You feel like a master of the financial universe, absorbing every tick, every piece of information the market throws at you. I've been there. I built that digital fortress of information around myself, believing it was my greatest weapon. It feels productive, doesn't it? The logic seems sound. More data equals more informed choices, which should equal smarter decisions and, ultimately, more profit. We convince ourselves that by watching everything we can't possibly miss anything. We're casting the widest net possible, hoping to catch the next big move no matter where it happens. But in reality, this approach is one of the most insidious traps in trading. What feels like diligence is often just a direct path to confusion. Because trading correlated assets, especially when you're just starting out or trying to find your edge, can actually make things exponentially worse by creating a crippling state of analysis paralysis. Let's break that down. Analysis paralysis is a genuine cognitive phenomenon. When our brains are presented with too many choices or too much information, our decision-making abilities can shut down. Instead of making a better choice, we make no choice at all. In the fast-paced world of trading, where seconds can mean the difference between profit and loss, this hesitation is fatal. The root of this paralysis often lies in correlation. When assets move in sync, think about how most major tech stocks tend to follow the direction of the Nasdaq, or how many crypto pairs rise and fall with Bitcoin's tide. Their charts start telling you the exact same story, just with slightly different accents. You're not getting 4 or 5 unique perspectives. You're getting one perspective repeated 4 or 5 times. It's like asking for directions and getting 4 people to shout them at you at once. They're all pointing the same general way, but one says, "Turn in 100 feet," another says, "Turn at the big oak tree," and a third just yells, "Turn left soon." The core message is the same, but the minor differences create confusion, not clarity. Suddenly, you're no longer trading the market. You're trying to make sense of noise. You start chasing these tiny, insignificant microsignals. You see a bullish divergence on one chart, but the other correlated chart isn't confirming it, so you wait. Then the first chart signal plays out without you. You're constantly seeking perfect alignment across all screens, a holy grail that rarely exists. And this chase only confuses your decision-making. You're not getting clarity, you're getting overwhelmed. You're not gaining an edge, you're drowning in redundant data. Here's what I've learned, and believe me, I learned it the hard way. I remember this one afternoon vividly. I was watching the EUR-USD currency pair, which was approaching a critical support level I'd identified. My strategy was clear. If it bounced, I'd go long. But I also had charts for GBP-USD and the dollar index, the DXY, open. As EUR-USD hit my level and started to show signs of a bounce, I glanced at my other screens for confirmation. The DXY wasn't breaking down with conviction yet, and GBP-USD was lagging, looking weaker than the euro. My brain went into overdrive. The EUR-USD chart was screaming buy, but the other two were whispering, wait, be careful. That hesitation, that search for perfect harmony across all my screens, cost me. By the time I finally felt confident enough to act, the initial low-risk entry was long gone. The move had happened without me. I was left staring at a huge green candle, feeling frustrated and foolish. My multi-chart system, which was supposed to be my analytical powerhouse, had become an anchor of indecision. This is the painful truth. The more charts I watched, the less confident I became. Every time one chart bounced off a support level, I'd question what I was seeing on another. Should I buy here or wait for confirmation there? It's a never-ending loop of second-guessing. My edge, which was built on a clear and simple strategy, completely disappeared under the crushing weight of indecision. So how do you escape that chaos? How do you reclaim your focus and your edge? The answer is deceptively simple, yet profoundly powerful. You perform an act of radical simplification. Pick one asset and go deep. Now, I know what you might be thinking. If I only watch one thing, I'll miss out on all the other opportunities. It's a valid fear, fueled by the trader's constant battle with FOMO, the fear of missing out. But I want you to reframe that thought. You're not missing out, you're tuning in. You're choosing to become a specialist instead of a frantic generalist. Think of it like a musician. Is it better to know how to play 3 chords on 10 different instruments? Or to master one instrument completely? The master is the one who creates beautiful music. This intense focus lets you learn the intricate rhythms of your chosen market. You start to notice things you never would have seen while juggling 5 charts. You learn its unique personality. You learn its quirks. For example, does it respect Fibonacci levels religiously, or does it tend to overshoot them? How does it behave on a Monday versus a Friday? How does it react to major news announcements like inflation data or earnings reports? You begin to understand the true character of that single market. You develop an intuition, a feel for its flow. You know when it's moving predictably and when it's acting strange, signaling that it's better to stay on the sidelines. This is a level of mastery you can never achieve when your attention is fragmented, and the results of this focused approach are transformative. Over time, your decisions get snappier. You see a setup you recognize because you've seen it and studied it 100 times before, and you act without hesitation. Your confidence grows, not because you're arrogant, but because your confidence is rooted in deep competence. You trust your analysis because you've done the work. You're no longer shaken out of good trades by meaningless noise from other markets. And most importantly, your results improve. Your win rate gets better, your risk management becomes more precise because you understand the asset's volatility, and your emotional turmoil subsides. You're no longer fighting the market, you're flowing with it. So next time you're tempted to add another chart, another indicator, another window to your screen, I want you to pause and ask yourself, am I seeking clarity or am I just adding complexity? Remember this mantra: clarity beats complexity every single time. Stick to one asset, master it, cut through the noise, and trade with purpose. I challenge you to try it for just 1 week. Pick one market, be it a stock, a crypto, a forex pair, or a commodity. Dedicate your analysis to that single chart. Journal its every move. See how it feels to trade from a place of depth rather than breadth. If you found this helpful, if this idea of finding clarity and simplicity resonates with you, do me a favor and drop a like on this video, and more importantly, go to the comments section and tell me the one asset you're committing to focus on. Let's hold each other accountable and build a community of disciplined, focused traders. Let's keep your trading journey simple and strong. Thanks for watching.